Hey guys, it's Carter. Welcome back to the channel. Hope you guys are all having a fantastic day today. Now in today's video, we are going to be talking about how we're already up a little over $1,700 in the past week of trading. We're going to be talking about the stocks we're holding, our strategy, our entry points, all that good stuff. So I hope you guys learned something in today's video. If you do, hit that like button and subscribe. And if you guys want to learn more about swing trading and trading in the market, check out our school. It's called the Swing Trading Masterclass. It's an 8-week course where we break down how to trade. You have lifetime access. It's updated all the time. And more importantly, right, it's not a get-rich-quick scheme. It's not alerts or anything like that. We teach you honest strategies that I've used over the past 7 years. I've been swing trading for 7 years. So we talk about what to do, what not to do, strategies, entry points, risk management, all of that good stuff. So I hope you check that out. We're doing an awesome sale for 2025. You guys can get 51% off, which is one of the largest sales we've done. Code 2025 to get 51% off. So sign up. I'll see you guys in there and let's jump into this. So guys, if you guys are just getting started with trading, I want to be completely upfront about this. Trading is not easy. It's not an easy way to get rich quick. It's not, anything like that. A lot of people jump into these videos because they think it is. I've been doing this full time for 7 years. And yes, I went from working a 9-to-5 job to trading full time, but I grinded. I didn't look at it as an easy way to get rich quick. I constantly learned. I journaled all of my trades. I never took anything for granted. I never thought I knew everything about investing or trading. So if you're just getting started, one of the things and one of the quotes that I absolutely love is, "You are the results of your actions." What that means is if you lack and you don't want to put in time and paper trade and focus on learning, you're going to have bad results, right? And that makes sense. So if you're just getting started, don't forget you are the result of your choices. So focus on learning and you'll be in a great spot. So let's turn to the computer and see kind of the trade we took. We took 2 trades this past week. Both of them are absolutely fantastic. We'll talk about why we bought them and some tips and tricks. So guys, one of the things here that I always get asked on is, what do I trade? Do I trade stocks, futures, options? So I trade stocks. For me, that's always what I've done. I understood it the best. And one of the things that I did is when I figured out what's working, I just focused on that. I always was a little confused. Now I understand them with options and futures. So for me, I just buy stocks. It's what I'm profitable with, and I don't want to change anything. So, we took 2 trades here, one on ENB, one on GNRC. So we'll talk about why we bought it. And the broker I am using, because everybody always asks, is Moomoo. I'll put a link to them down below. You guys can get up to 20 free stock by signing up. So if you guys are watching this and you're maybe wanting to elevate your trading or you want to eventually quit your job, what should you do, right? Should you jump into trading full force? No. What I would recommend doing is to paper trade. Paper trading is using simulated money to practice, and I would focus on that for a minimum of 6 months to a year. Then start small. Fund your Moomoo account with $100, $200, and just get used to trading with capital. Do that for another year. Become profitable in that small account. And the only thing that's separating you from making more money is once you're profitable in a small account is just your account size. So just continue to invest, continue to trade and grow that account and you'll be in a good spot. All right. Why did we buy these 2 stocks? So for me, I love checklists. Checklist is probably one of the best things a new trader can do because what it forces you to do is choose quality over quantity. So with this stock here, we notice that it has that good upward trend. It has heavy support here on the blue and yellow lines. So these are what we call moving average lines. These are just technical indicators traders use to get a general direction, to get support and resistance. So you guys can see I already have them circled, the heavy support here on the blue and then heavy support here on the yellow. So the yellow is the 50-day moving average line, the blue is the 90, and the red is the 200. The main difference is just support strength. The higher up you go, so like the 200 moving average line is going to be a harder support than the 90. 90 is going to be a harder support than the 50, right? So in an ideal situation, I always like to trade on the 200 just because it has better tendencies of getting buying pressure, but you don't have to only trade on the 200. So one of the things that I look at is just previous history, right? Just because history tends to repeat itself. So we notice the stock has good upward trend, which is the first thing. The second thing is support. So we understand that the stock hit that blue line, right? So that would be classifying the support. The next indicator I look at is called the RSI, which stands for the Relative Strength Index. This tracks momentum. So you guys can see where that stock sold off, the RSI was trading for a 32. The last time it was trading for a 32 was all the way back in here, and what happened? Had great buying pressure. So now we're looking at this and we go, okay, the stock sold off, hit that 90-day moving average line. The next thing that I always kind of want to plan out is planning out the trade. So this is why I love Moomoos, because they offer this tool. So this would be the plan here, right? Hopping in just above that 90-day moving average line, okay? Setting our stop loss about 2% from the current price, just below that moving average line, just because that's a support line. So now the risk and reward there is about 4 to 1. So you're risking $1, okay, to make $4 in simple terms. And the reason why this is so incredibly important here, I kind of want to show you guys, is because if you guys were starting out with that small account, like I said, of like $100, all right, imagine you find these types of trades over the course of a year, maybe 40 times, little less than once a week. You're risking that 2%, like I said. The risk and reward is 4 to 1, not 3, 4 to 1. So now your win-loss percentage, imagine if you actually win 40% of your trades. So 60% of the trades you take, lose. Guess what? At the end of the year, what are you? You're profitable, okay? And you're more than profitable. You actually doubled your account. So now imagine 30% of the trades are winners and 70% are losers. You are still profitable at the end of the year. And that's why basic risk management is so important. I think the win-loss percentage is about a little over 20%, about 22%, and you can still make money. That's incredible. And that's what we look for here. So now we go, okay, where should we enter? Well, obviously you want to enter here on the on that 90-day moving average line, but you also want to look at lower time frames. So what I do is I look at the hourly chart. Now, the hourly chart here, what we're kind of looking for is a breakout. And that's kind of exactly what we saw, right? We had that great downward trend. Best entry point would have been right here on that breakout. And here's the thing, guys. We actually missed that entry point. So with trading here, if you enter here, the downside of entering there is there's a lot of resistance. You have resistance here. You'll have resistance at every moving average line going up, which it can easily break out, just like it did. But we kind of missed the boat on that. We actually entered right around here, near and around that 41.60 mark, setting our stop loss just below it. The risk and reward was virtually the same, if not a little better. And we had the confirmation of a new trend, which is very important here. So now here, look at the risk and reward. We set our stop loss just a little bit below it, 7 to 1 risk and reward on that, right? Looking at a lower time frame. And that's what we did, and the stock has rallied up. And now we're just continuing to move our stop loss up and up and up. So now our stop loss is that guaranteed profit of about $1,000. And it's at about $42.47. Now, you might be looking at this and you go, Carter, well, from here to here is only 3%. 3%, if you guys make 3% a month, you're better than 95% of traders. So I'll gladly take this any day of the week, right? And this is just one trade. Another stock we're in on is ticker symbol GNRC. GNRC is a very similar stock here, but one of the things is it does have heavy trendline support, which is a little different, because looking at this now, it has buying pressure, buying pressure, buying pressure, buying pressure. So if we remove this line, you'll also notice, like I mentioned with the moving average lines, is it has heavy support on the red line, which is that 200-day moving average line, the hardest support the stock can see. So now RSI is undervalued and the risk and reward's good. So now instead of entering on that breakout, you guys will notice where that stock kind of started consolidating, right? Where it wasn't going up, it wasn't going down, it was just flat. That's where we got in. We actually got in on this support level near and around, that about 51 90 mark, right in this range here. The reason why we got in here is because we could keep our stop loss just below it. And look at this risk and reward, right? So if we break this down, so entering here on that support, keeping our stop loss just below it of about 2%. Even if it comes back up to our 200-day moving average line on the hourly, it's almost a 3-to-1 risk and reward. If we can get a breakout to resistance, look at this, 13-to-1, risking $1 to make $13. So those are the types of trades we look out for and we watch. So now our stop loss is going to be just below the 54 mark. So it's guaranteed profit. If we can get a breakout, that's even going to be better. But I'm very excited for both of these stocks. We're already up handsomely. The stock is now slowly starting to break out. This one does have a little resistance at that 200-day moving average line. So if it does end up breaking through it, we'll just take our profit and move on to other opportunity. And that's exactly what I would recommend doing, right? For me, I've never lost money taking profit. So when I'm up and the trend changes, I'm just going to take my profit and move on. So guys, I hope you guys all enjoyed this. If you did, hit that like button and subscribe. And we'll see you guys in the next one. Like, subscribe, and don't forget to check out our school. Don't forget to sign up with Moo. And I'll even put our digital trading journal down below. So if you guys want to sign up for that, you guys can get it there. But like, subscribe, and we'll see you guys. Take care.